tell us about a recent deal you just done. What was the purchase price? How much did you spend on renovations? What did you get for seller concessions? And what are you renting it out for right now?
This last deal that I closed on, that was probably a double, like in the gap, good shot. This was another condo, 2-bedroom, Old Orchard Beach, 1.5 miles from the beach. Yeah, it was another off-market deal. So my past 4 deals have been off-market. And how that happens is it's just word of mouth. Honestly, I reached out to the HOA, said, hey, I've lived here and also owned here for about 17 years. If anybody's looking to sell, please reach out. And that's what happened. This guy was interested in considering selling about 1.5 years ago. In July, he got more serious. We signed a purchase and sales agreement for January 16th of 2024. So I'm like, this is awesome too, because now I'm gaining some appreciation. Despite what the economy and media might say, prices are still kind of going up if you're buying in the right areas. It's just not going up as fast. I got 1,500 seller concessions. I got the deal for $197.5. It was I paid him for the GFCI. I needed a drain plug. I needed a few lights in, just light bulbs in the fans, a gas detector and smoke detectors. I put in a whopping $206 with the 7% interest rate, 25% down, $2,020 in rent, not including utilities. I don't pay for them. She gets a voucher, and there's a $200 HOA. And combine that with the 5% of anticipatory costs for repair work and whatnot, I'm making 14% cash on cash. The whole annual return, when I combine the unrealized gains, the principal pay down and the appreciation, is 24.2% return first year.
How did you find the resident for this property? And just tell us a little bit about the story.
I reached out to 4 different government agencies. I received, I think, about 12 different applicants in the course of maybe 3 days. And I started this process, guys, before I owned the property even. Believe it or not, you could start doing that. If you're quite confident you're going to close on it, you're not wasting anybody's time. You're saving everybody's time. And then my scoring system, which is based on kind of years of doing this, these tenants are resilient. They've been through a lot of tough times. You're not a slumlord because you're helping them out. If anything, you're almost a savior. So then I'll call in. So in this case, it was through these doors that came up big. And I spoke to this woman with her case manager on the phone because I don't think she had a cell phone, and was able to go through what she completed in her case manager's office, my application, and she scored very well. So what ended up happening is my realtor, who knows my process very well, he met my tenant and met the son, and he's like, Mike, I didn't even know what to do. When I unlocked the door, the mom was crying and the boy was hugging me. And I was like, that's pretty wild, isn't it? It's incredible, right? It makes you feel so good. He's like, yeah, I didn't even know what to do. I was like, do they think I'm Mike? I think they're just so damn happy they don't care. You unlock that door for them and you're unlocking a new trajectory of life for them. And they were so happy to get in there.
Welcome to another episode of Affordable Housing and Real Estate Investing. Today, we got an OG in the house. We got Mike Caggiano coming back onto the podcast. And for folks that have not listened to his past podcasts, make sure you check them out in our past podcast episodes, because Mike dropped so many gems about how to invest in affordable housing, Section 8 specifically, but also figuring out how to leverage condos, HOAs, and how that might actually be beneficial for you as an investor. But today, Mike has closed on some more deals, and I am so excited to welcome back Mike. Welcome back to the show, man. How you doing?
And thank you. I'm doing well. I always love the energy. I do. It's fun, right? This is a great cause and a fun thing to get involved in, ultimately. So I'm great. Thanks.
Mike, it's such a pleasure to bring you on, because every single time you come on, we have great feedback. People have told me like, oh, this guy really knows what he's talking about. And I was like, all right, cool. I'll bring him back on and we'll see what else we can do, because I genuinely have a lot of fun on these conversations. And I get to learn myself, because every single market, every single jurisdiction is a little bit different. And they all have their little quirks, their own nuances. And so sometimes people ask me all the time, Mike, they're like, hey, where should I invest in? How should I invest? And I always tell them, like, well, it kind of depends on the team that you have in place and your knowledge of the market and your relationships, because that's what's most important. And you have closed deals in 2 different markets. So tell us about a recent deal you just done. Tell us a little bit about the financials and maybe the person and the family that you helped.
Yeah, sounds good, Ken. Yeah, and to your point, right? It's not a one size fits all. It depends on your model, your philosophy, what you want to get involved in, and how much you want to get involved or how little you want to get involved. And that's how you can make a decision based on your own due diligence, right? It's not just a guru that you're listening to and follow me. This is the Grant Cardone way or something like that. Like, it's like, all right, wait, let really slow down here and figure out how can I just get involved. So I've taken an approach where I'm just basically hitting base hits, right? I love sports. So, another sports analogy where rarely when I'm at the plate, I'm not trying to hit home runs. You may occasionally hit one though, right? And I played baseball through college and, that might happen. I might get lucky and, make a good swing and connect the right way. But most of my real estate investing has just been maybe even bunt singles, right? Some of them have just kind of worked out. Other ones have been good doubles. So I feel like this last deal that I closed on January 16th, that was probably a double, like, in the gap, good shot. It's a 2-bedroom condo in a already, I talk about buying in little pockets of areas that you've kind of refined and you've done your research and your due diligence. And I've talked about that on other podcasts. And I like to do that. And that's what this was. This was another condo, 2-bedroom, Old Orchard Beach, 1.5 miles from the beach. And I massaged this deal for about 1.5 years, which is crazy. It was another off-market deal. So my past 4 deals have been off-market. And how that happens is it's just word of mouth. Honestly, I reached out to the HOA, said, "Hey, I'm a guy. I've lived here and also owned here for about 17 years. If anybody's looking to sell, please reach out." And that's what happened. This guy was interested in considering selling about 1.5 years ago. And so what happened was then in July, he got more serious and we signed a PNS in July to date this. So July of 2023, we signed a purchase and sales agreement for January 16th of 2024. So I'm like, this is awesome too, because now I'm gaining some appreciation, right? I mean, despite what the economy and media might say, prices are still kind of going up if you're buying in the right areas. It's just not going up as fast.
Wow. So what, guys, listen up. What a great avenue for deal flow. Going to the HOA and telling them, "Hey, I'm a buyer if you ever have anyone sell." Well, let's get a little bit more specific. Did you ask the HOA because I'm assuming they get notified whenever anybody's about to sell? Is that how it worked?
They don't, as far as I know, because I've never sold. I only buy in that area. But from my understanding, no, you don't have to notify the HOA that you're selling. What I ended up doing is there's a community message board. Most of the HOAs, like of the properties I have, I think I have like 5 different HOAs I deal with. Each one of them have their own little like community message board that only homeowners that own in that community can message each other. And so that's what I did. I said, "Hey guys, my name is Mike. I've owned in this property unit for since 2005. I'm interested in selling. Here's my email. Please reach out directly to me if you're interested." And what ended up happening there too, this particular gentleman didn't reach out to me via that. He learned of me from I bought the unit across the hall. Literally, it's in a hallway. And I bought unit 30 and he knew unit 30 owner very well. And so he spoke with unit 30 owner and he's unit 29. So unit 29 talked to unit 30 and said, "Hey, I had a great experience with this guy named Mike. And he said he's still looking to sell. And he told me to tell any of my friends in the community, if they're looking to sell, please have them just reach directly out to Mike." And he said, "Hey, he'll share his contact info with you." So that's what ended up happening. This guy, unit 29, reaches out to me and says, "Hey, unit 30 told me about you." And that's how that played out. But and then 2 other deals though that I did get was from the message that I put. So a total of 4 deals stemmed from just word of mouth, basically. Yeah.
Well, everybody better take notes on that, because who would have thought that you could get a deal from an HOA, not on the MLS, not through a wholesaler, but through one, establishing great reputation. Because Mike, I'm very confident that this guy would have never reached out had the past seller said, "Oh, you're a terrible guy to work with." Right? There's no way.
Yeah. No, there isn't. There's no way. You're right. There's no way. They would have said, yeah. They wouldn't have brought my name up in conversation. And I think one of the unique things too, Kent, is something that we maybe undervalue is they want a turnkey solution, and they may not know how much you do know or how much you don't know. But if you could speak confidently and you understand a purchase and sales agreement, right? And you can go through that with them. You understand you're going to need a title company. You could go through that with them and say, oh, I use, Baldacci and Trey Wargo in Scarborough. When I said that, this guy was like, oh yeah, I drive by that. He felt like I rolled out the red carpet essentially for him and we didn't negotiate price at all. He said the price and I just said, that works. I have a number in my mind, right? And if I'm not going to try to nickel and dime him, I already know I'm at an advantage here, and they feel a little vulnerable. So I knew what to ask for and what not to ask for. And I was able to get this crazy thing called seller concession, right? Seller concession has been dormant for maybe 4 years since COVID. So I got seller concession. So that was a beautiful thing. So getting to $2,500 seller concession is like getting $2,500 less on the price. But yeah, I got a sub 200 condo under 200K that is selling for like 215, right? So he felt like it was a win. He said, hey, no commissions, no realtor involved, Mike, right? I said, no, we don't need a realtor. We're good. I'll do the title search. I'll do, everything we need to do. And yeah, he had a great experience and he did every single thing I asked for as far as cleaning it, making some repairs, getting it ready for the inspection. Because from the time I closed, and then we fast forward a whole whopping 9 days, I already had a tenant in there after 9 days of closing. So my tenant moved in and I collected rent January 25th. I closed on January 16th and my tenant moved in January 25th after it got inspected, passed. She never saw it, but I take good photos. There's good ways, systematic ways that we take to ensure the time it's vacant is very little. And so 9 total days.
Man, I think this is why execution is so important. Because for everybody else, right, when you look at a deal, and what I've been doing every day on the YouTube channel is analyzing deals live every day. However, sometimes we underwrite withholding costs. If you just learn what Mike did with his property, he kept from the time frame, from the time he closed to when it got rented out, less than 10 days. Talk about the savings of holding costs. Talk about being ahead of the competition, because a deal that might not be a deal for someone else because of the holding costs and lowering the cash on cash return, whatever you want to call it, the deal for Mike because he knows that he can execute with his team. And that's so important. And I really hope everybody really honed in on that point. I really wanted to highlight that because that is why you invest in the areas that you have a great team on and you know the systems and how to apply it. Way to go, Mike.
Yeah. Thanks, Ken. Yeah. And to that point, right? It's the process. It's not waiting, right? In the times that you have, the ambiguity of time that you have in between, oh no, what's going to happen when it gets inspected? You could be doing things. And that's what I talk about in our guide at Section 8 Secrets. We talk about that to our students is like, there's stuff you can be doing. Don't just twiddle your thumbs. Don't just wait for the loan to close. What can you do between now and the time the loan does close? And that can include getting a plumber, getting an electrician lined up, understanding what are the little nuances that property has that likely HQS isn't going to like. Find those things out. I had the Unit 29 owner video. He walked through the unit. I got to know him so well. I said, hey, Unit 29, do you mind taking a video? Can we video through the unit with me? So we did like a FaceTime thing. And I was like, can you look at the sink? Can you open the sink up? And he did all this for me. And I had some repairs for him, right? I treated him so well on the negotiation that he's a handyman. He turns out he could do some stuff. So I had him clean out the sink. It had a little bit of mold underneath it. I knew they wouldn't like that. Right. There was other little caulking around the sink. I was like, hey, Unit 29 owner, can you caulk around that? Do you have some caulk? You know what that is? But all that stuff I did before I even owned it. Right. I had him doing work for me and he was the current owner, but it was just a good experience. Yeah.
Wow. That is so clutch. Having the seller do some caulking for you and taking out a little bit of electrical work. Just a little bit of mold. Electrical work too? Wow.
He did. He actually, because there wasn't a GFCI, so I know by the sink, one of the HQSs is it needs to be a GFCI. I said, whoa, Unit 29, that's not a GFCI. Do you know can you take that out and put a GFCI unit or connection in there, an outlet? And he said, yeah, I should be able to do that, Mike. I said, all right, well, let me know, if I owe you $25. And he's like, oh, I don't care, man. I'll do that for you. No worries. So
great gem there. How do you spot if a outlet is GFCI?
The words are kind of subtly imprinted, but you'll also see test and reset. You'll see a little light on there. So it should always be green. If it's red, then it needs a trip. And if you hit the reset and it doesn't trip back to green, then you might have a faulty GFCI or it just might be stuck. I've run into those things, but yeah, no doubt the inspector will probably 9 times out of 10 be checking every GFCI that's in your unit, which you may need one by your bathroom, depending if you have an outlet there by your bathroom sink, and definitely in the kitchen.
Yeah,
Yep.
especially also if you're outdoors and it's near any potential sources of water, you guys got to have that taken care of. So
Yeah, to
I'm
that
glad
point,
you went through it.
yeah, and Ken, to your point about outdoors, I always say this. I say this in the training too. If there are any outdoor outlets, go ahead and cap them. Just take them out. They're just a pain. They're not required, but if they're there, they have to work, right? It's the same thing with a garbage disposal. And actually, time out. This was one of the best ones. He was like, wait, like, what are you talking about? I asked Unit 29. I said, Unit 29, do you mind? I see that it had a dishwasher. I said, that looks a little bit dated. He's like, yeah, it's about 9 years old. I said, let me ask you, Unit 29, are you able to take it out? Do you mind taking it out and just removing it? And he's like, well, he's like, why? What am I going to put there? I said, well, next question is, are you able to put like a little cabinet, a little hinge on there? It turns out he was a handyman. He's actually done some work in the complex itself with building management. So turned out I knew that guy. Once I started talking to him, I was like, oh, you worked on the foyer on building C, didn't you? He's like, yeah, that was me. I was like, oh, okay. So anyway, he's quite handy. He took that dishwasher out for me and put in a cabinet because I don't like dishwashers either. I don't like them. They're a hassle. They mess up, they leak. And if they don't work when the inspector's there, you don't pass.
Yep. What a great tip. Because I literally ask people like, hey, what kind of appliances or amenities do you offer your residents? I have people that suggest like, hey, we don't like washer and dryers because they break and choke on themselves all the time. Dishwasher is a great one. The garbage disposal is a great one. Sometimes there's just appliances that naturally break all the time. And sometimes you can either budget for it or you can take it out.
Yep.
All your personal preference. Well, Mike, let's walk through the financials for this deal. What was the purchase price and how much did you spend on renovations? What did you get for seller concessions? And what are you renting it out for right now?
Yeah, sure. Yeah. So this was ultimately, I guess you'd say after the seller concession, I got 1,500 seller concessions. So call it 198. I got the deal for 197.5. So 197,500. I put in here. You know what? Let me go ahead and look at my spreadsheet really quick. I can tell you, not a whole lot. You're going to probably laugh. You're going to be like, wait, what? Usually there's not much. There's really not. Yeah, I'm literally adding it up now. I put in a whopping $206.
What? That's unheard of.
That's it. So I target, though, this goes back to my model. It's a repeatable, scalable approach that I choose not to go full tilt on the accelerator. So when somebody, it's funny, my broker, I work with brokers too. I'm a huge advocate of brokers, mortgage brokers, insurance brokers, love working with them. And my insurance guy's like, geez, Mike, you're really going all in on this real estate thing. And I started laughing. I was like, you think, Chris? But anyway, this was just my 6th unit that I have with him. I have 2 other two other insurance brokers. That's just for Maine. But anyhow, yeah. So a whole $206. I'm looking at my sheet here. I paid him for the GFCI. I needed a drain plug. I needed a few lights just light bulbs in the fans, a gas detector and smoke detectors to get it up. And that was it. And I just paid him, the money and he did it. He knocked it out, got the job done. So all in, I'm looking at, just call it 198 then. So round that up. So I'm all in at $198,000. And it turns out the rent is actually a little bit more than I had forecasted. I get, not including utilities. So my tenant gets her utility voucher. I get $2,020. I receive $2,020 a month. So pretty good. Yeah. Pretty good return. I mean, it beats the 1% rule. Yeah. It beats the 1% rule.
You got it for 197.5. You put in 206 in cash into it. Did you get this deal financed through like a DSCR loan, through conventional loan?
Yeah.
How'd you finance it?
Yeah, let's talk financing. So I put 25% down. And so for the listeners, there's a logic behind why I do the 25% down. There's 2 good things that happen. One is, and there's different buckets and variables that will influence what you get for financing if you're trying to get Fannie Mae conforming, Fannie Mae, Freddie Mac loans. One of them is going to be your FICO score. So FICO score of like 780 or above. And I think they look at like the TransUnion one. There's Experian, TransUnion, and Equifax. But anyway, that needs to be a 780 or above. I had that bucket covered. The next category that'll give you the best financing is going to be down payment. And what I've learned is 25%. So 20% will get you one rate, but 25% gets you about the best rate, even if you put 50% down. It's like that 25% threshold. So I did it for that reason too. But then I also did it for another reason that Fannie Mae and Freddie Mac loans look at, which is the rent to owner ratio. So I learned this. This was the first time I learned this little variable, and this little tidbit of information was Fannie Mae, Freddie Mac, if you meet the 25% threshold, putting it down, they don't look at the rent to owner ratio now. Apparently they look and say, hey, this is collateralized good enough. We're happy enough with it. He's putting 25% down. We feel it's not as risky now. We're not as concerned with if there's a bunch of investors here, because the listeners, I mean, Kent, I think you know this, but they look at it and say it's riskier. If this is the majority is investor-owned complex, they look at it and see it risky. It's a flight risk. People could just jump ship. They don't have as much stake in the game. They're just an investor. Who knows? Maybe they'll just cut ties, forget the loan, and foreclose on it or something like that. Yep.
So this is not a DSCR loan. You use like your own tax returns and your W-2 income to qualify, right?
Yep. And another good little tidbit is when you're putting 25% down, in addition to not worrying about the rent to owner ratios, you also don't need to worry about reserves. So what reserves are is 4 months reserves for every single property you have. Well, when I was early on, I couldn't get that other 5%, but now I have enough cash flowing coming in and, a good surplus where it's fine. I could do 25, 30, 40% if I wanted to wait an extra month and collect that. So anyway, that's another plus there, is you don't have to show the reserves. Because at the time, I really probably couldn't show the reserves because I wanted to put them in a money market account where I was getting like 6%, which is pretty awesome. So they want to see it's totally liquid. It's in your bank account. And that's on for every property. It's not just reserves for that particular property. If you own 6 properties, they want to see 4 months reserves for all 6 properties. Yep.
And man, Mike, I really love this story because in real estate, you always hear about, oh, I can't wait to quit my job and have financial freedom, et cetera, et cetera. But this is a great example, everyone, for following Mike's example and you not quitting your job to go become some sort of wholesaler. Like you can use your W-2 income, qualify for advantageous rates compared to other investors, and understanding how the system works and understanding how to meet certain obligations or requirements for these loan products that you would only qualify if you had a full-time job. So I just want people to stop thinking like you have to quit your job to be successful in real estate investing.
It's a great point, Kent. Yeah, that's one that I talk about at Section 8 Secrets too, is like when I let even our clients know, like I actually have another job. Like I have a W-2 job. It's not that I'm also practicing what I preach in Section 8 Secrets. I have a W-2 job. And I look at it this way, Kent, and I talk to a lot of new time investors. We have a kind of an eclectic group. We have some with more properties than I have in Section 8 Secrets as clients. One of the things is, like, I look at it this way, back to sports analogies, right? I actually call it defense first, then offense, and then figure out what game you're going to play. What sport are you going to play? Meaning in this case, I'm playing the sport of real estate. You might play the sport of small business owner. Somebody else might play the sport of equities. They might want to do stock trading. So defense meaning what's your budget, right? So focus on the budget. Focus on where can you stop buying, liabilities and start buying assets that are income producing versus adding to your liabilities with cars and going out on fancy dinners and how much are you eating? Like we talk about that. And then offense being your job. That's the next most important thing. So defense first, that's your budget. Figure out your budget, get a full grip on your budget. And now figure out your offense, which is offense is money. Offense is how can you make some moves? You can't make much offensive moves if you have no preparation, if you haven't prepared your budget, and now you can move on, and now you have a game plan of how are you going to get that money. And so that's critical, absolutely, to your investing is your job, and get better at it, right? This is what I talk about. Like so many people, you're in your job, you're passive, you're just laissez-faire, you're just kind of going through the motions, and those are not good traits anyway. So if you reflect on it and really think, oh, I want to make all this money because I saw this Grant Cardone 10X thing on the internet, dude, Grant Cardone's problems are nowhere near your problems. You will not have those problems. Your problem right now is offense, is figuring out how can I get the capital I need to make the first baby step toward the Grant Cardone. But Grant Cardone stuff is like, dude, don't worry about that stuff. Like that's out of reality. You know what I mean? Like most of that stuff's like, No doubt he kills it, I guess, but that stuff's so far removed. And then it's pick the game. Pick what aspect in real estate. In this case, we're talking real estate. What do you want to do? Are you multifamily? Are you going to get other investors? Are you syndications? Are you REITs? Or are you just a small guy? And that's what I consider myself. And you're willing to keep your job, raise a family, and just keep picking off properties here and there over the next 10 to 15 years. And that's what I've had the grace of being able to do, right? And no doubt, though, offense is critical. So your job, your W-2, do more, find out what else you could do. I always am an advocate for inquisitiveness. Have a huge inquisitiveness, because I do feel like this, Kent. I know I'm going off on a little bit of a tangent, but I had this discussion like a couple of weeks ago with somebody. It's like most employees try to figure out the least work they could do to get the most money, right? Like they don't want to keep taking on new stuff. And I think about my career and how I accelerated so fast. I wanted to do tons. I was there to learn because I knew once I got my foot in the door, take that mentality. Going back to sports, I wasn't blessed throwing 95 miles an hour. I couldn't run, I don't even know what a 40 dash is fast, maybe a sub 440 dash. I was good, but I wasn't great. And then when you go to college, you're just barely good now. And so I had to work my butt off to be considered good to even play in a game. So I take that same work ethic now. What's really cool is in the W-2 world, in corporate world though, your inefficiencies are kind of unknown. It's not a physical inefficiency now. It's a work mindset, right? It's work. Wow, this guy really has a good attitude, right? It's wow, that guy's really willing to learn, especially in your early age of your career at a new job, not even maybe your age, but now you're at a new job. Like reset yourself now, reset who you are and who you want to represent. What is your persona at that new job now? So maybe you weren't great at the other job, but now you're resetting. Get it going now. Get it going. Have that inquisitiveness, have a positivity about you, have a willingness to learn. Keep adding crap to your plate, though. Not too much where you're going to have a mental breakdown, but that is something that I did early on, and that helped me get to a much bigger offense, right? A much bigger income, a much better way to position myself to take a little bit of risk, so to speak, and buy some real estate.
Well, this is interesting. And I'm going to come back to this case study, but since we're on this topic right now, I really want to hear from you. What sort of skills in the corporate world, in your W-2 job, has been the most transferable to the real estate world, in your opinion?
Yeah, I'd say, I mean, maybe some people skills for sure, but like detailedness. I mean, in my role, I read a lot of documents. I really do. I'm a, HR operations guy. I oversee a lot, and I have a way of not minding going through the fine details of things and looking at numbers, looking at headcount forecasts, right? Looking at certain budgets. I'm no longer in a role where I have to worry about the HR budget, but at one point I was, and it was like a $3 million budget per year. So that was a big deal. So taking those types of traits and qualities that I learned, particularly, let's take Excel, right? I got really good at Excel. It was kind of interesting too. It was like, why are you worried about, like, when I would interview people, I would ask them about Excel, and they're like, this is HR job. Why are you worried about, like, how do I do a pivot table, or how can I do VLOOKUPs, or, what the hell's an XLOOKUP? What are you talking about? XLOOKUP? Like stuff like that, concatenate, right? But I would ask them that because they were about to join my team. And I said to them, I said, well, we leverage Excel a lot in this role, believe it or not, within HR. So I'd say that type of skill, helpful there, because that became my deal analyzer and my underwriter and my forecaster is all done via Excel, Google Docs. And then there's those people skills, those soft skills that you learn, listening skills. I know I'm doing a lot of talking now, but I try to teach, hey, take a breath, listen 80% of the time, talk 20% of the time. And that's what I do in my negotiations, like Unit 29. I let him just talk and talk and talk. And then I said, okay, well, 29, what are you thinking for a number? And he told me the number. I said, that works. That's all I said. That works. He's like, wait, really? I was like, yeah, that works. So, just those types of skills that you get accustomed to. And then, maybe the last, is like the inquisitiveness, going back to that, like the willingness to know that you don't know it all but you want to learn it all, and I think about that now in real estate. It's not very humble, but I do feel like maybe I could probably do a closing, right? I could probably do my own closing without the title attorney. I've learned enough about what these docs are, what we're going through. I could probably do a home inspection. I could probably do an appraisal, right? I feel that way. I feel like because of the inquisitiveness, I've looked at so many appraisals. I've looked at so many home inspections, some of them being 56 pages long. And I'm looking at this like, what are they really looking for here? But having that type of aura, like this, the willingness to want to learn about it is only going to help you be more confident as an investor too. So, those are some of the traits I think that, bode well for investing.
Man, I love that so much. And I guess the one point I would make here is for all of the folks that might be listening to this that's still working a full-time job, you might be viewing as your colleagues as like, oh, these coworkers, they don't understand real estate. Like, I can't wait to leave this job, blah, 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 blah. But man, if you really think about it, all your colleagues and your coworkers, like they could be potential investors with you. They could be your potential partners. And if you think about it, they probably, some of them have the same aspirations as you do. They want to spend more time with their family. They want to have that financial freedom. So if you can become the solution to their problem of getting more time and getting more freedom, now all of a sudden, that excuse of, I don't have enough money or real estate is just a game for the rich folks. Now all of a sudden, you might be able to get partners and private investors. And that's something that you should not discount lightly, because now all of a sudden, you're also holding yourself more accountable at work, because guess what? The person that you are at work today, if you're a diligent person, if you're on top of your stuff and you're getting things done, chances are your colleagues are noticing and they might want to invest with you. I literally still have colleagues from my old job that says like, hey, I got a couple $100,000. What can you do with it? So please just understand, like, all these potential opportunities are all around you, and your brand is what you do every single day, and how people talk about you is your reputation.
Yeah, no, that's a great point too, Kent. It's like branding. Yeah, what is your brand? If you don't know it, then just reflect, and it's good to have one, because then you're more memorable. You're doing something a little bit more impactful than just going through the motions, right? It goes back to what I said. I feel like most employees, no offense, but a lot of them are trying to do the least amount of work for the most amount of money, right? It's just the way it is. I get it. And some of them, maybe most even, have like sort of this resentment, right? For, gosh, I have to work, the F the corporate type mentality or something. And it's like, take a breath, dude. Like you haven't been in it that long. Like, even I say to myself, like, oh, I'm old and, wise. It's like, am I really? Because how many, like, I think even like my father-in-law, I mean, he retired not until he was 62, and I'm in a position where, 20 years sooner, I could, right? It's like, so, I mean, have respect and have perspective on where you are and why you're there and what you can do with what you have offered, because there's plenty of people that don't even have a job, right? And now that's a whole different coin to look at. That's a whole different side of things. Is you need to get a job. You need to have some sort of offense. Going back to my, you need that offense. So hopefully your brand is one that people gravitate toward, because if you are just going through the motions, it's likely you're probably going to take that same going through the motions, let's call that a skill set, and apply it to real estate. And guess what? Unfortunately, it may not work out as easy as these gurus on that we listen to make it sound. I don't think you could just go through the motions with what they're saying. It's not as easy as it sounds. I'm not saying it's hard, and I'm not saying it's not easy, but you do need to have measures in place in a way about how you go about doing things that are going to be systematic to ensure success and foster the results that you want.
And I'll jump in here because I love your thought process behind being inquisitive, being curious. Maybe this applies to how you have found your team, Mike, of how you've been able to be successful at real estate. It's because you have a great team in place, from electricians to plumbers. Can you share who you have used for some of your projects, like any of the subcontractor company names, and how should people specifically screen these folks? Is it through referrals? Is it through asking them questions? Let's start there. have you used for some of your renovations, and how did you realize that they were good people, quote unquote?
Yeah, good question, Ken. I would say, I mean, in first, before I even, I'll get to some of the contractors too that I use. And I also think about this when you're getting a unit, what I found, and things might be changing a little bit, where some of these housing choice vouchers in particular, these holders, they don't have access to the internet. And this was kind of a new thing for me, Kent, that I experienced just recently. Was I was amazed that I didn't get 10 applicants a day. So like a year ago, 2 years ago, I was getting a lot of applicants, it seemed like. And suddenly, though, I was like, wow, what's going on? There's just not that many applicants. So what I found I had to do, believe it or not, although there's a huge shortage of housing for them, there's also a huge shortage of computers for them. So they don't have access to the internet. So where I'm going with this is about resources. Was you can't just advertise your unit anymore, I don't think, on Craigslist and on affordable housing. You actually need to leverage some resources there right from the start to find your tenants. And then I share my application with these resources. And these resources are places such as, and I have a spreadsheet of them, Seeds of Home, that's in Maine. These are going to be particular ones. Government housing resources is what I'm referring to when I'm saying these names. The Maine Behavioral Healthcare, I needed to reach out to them. I needed to reach out directly to some of the housing authorities. Some of them have good resources there that they have applicants and they have ways about going about it. Other ones, nonprofit orgs such as Avesta Housing, Bread of Life, Caring Unlimited, Through These Doors. These are specific government housing agency resources that you as an investor should become familiar with when you're going to get your unit, because it isn't as easy as advertising on affordablehousing.com. A lot of people know about that. It's not that easy anymore. And I think it's just because these people, they unfortunately don't have the money. They don't have the hardware to get on the internet and search. So you're going to be in a much better spot if you partner up with your local government housing resources, such as the ones I'm naming that are likely in many states. Avesta Housing, I think, is nationwide. Bread of Life, I believe, is nationwide. Seeds of Home, I believe, is nationwide. Check those out in your county, in your town, in your zip code, and see what's there, because these shelters can help you as an investor. Now, what I do from there is I tell them, if you have, they call them the case managers. If you happen to have a client, they call their housing choice voucher holders clients. So I talk to the case manager. If you have a client, please have them do this application when they're in your office. And my application is a whole nother resource that I leverage heavily, because then I'm getting maybe 10 applicants within a week. I think I got like 10 applicants, Kent, when I advertised. Yeah. And so that's that list of resources, the government housing resources that I highly recommend investors get, familiar with and find them out. Just Google it before you even own your property. Start reaching out, send some emails, get to know these people, right? And I have a list of the people. I have their contact numbers. I have their emails listed. I have a huge database of resources that I leverage, and then my friends leverage them as well. Mike, how do you get somebody in this area? It's like, oh, call Megan over at such and such place. She'll line somebody up for you. So
no, that's great, because I get those questions all the time. They're like, hey, where do I find a tenant? So I just list it on there. And I always have to say, every city, every county, depending on your jurisdiction, is going to be different. Yeah. And Mike just gave you a couple of categories, like housing authorities are one of them, nonprofits are one of them, all these other organizations that chances are they want landlords to be what I would call repeat customers, so that they will come back and take good folks. Because guess what? At the end of the day, one of your biggest expense items is going to be vacancy. And the other one is going to be maintenance or repairs. If you find good people that will treat your property with dignity and respect, chances are your chances of succeeding is much more likely. Well, on top of that, then you also have resources such as the plumbers and the electricians. So how did you find those resources, Mike?
Yeah, good question. So that would just be through, like I highlight in the training too, is trying to buy in clusters. Like you could be market agnostic, no doubt. You should be. I strongly believe in that, especially as the market tightens up the way it has. Maybe in the area that you were buying recently, just no longer the numbers don't size up the same way and look as lucrative. So what I end up doing is, if let's say I'm going to buy in a new area, which I'm actually pretty sure I'm going to. My realtor is literally texting me. I'm going to buy in Greensboro, North Carolina. Very good area. A lot of institutional buying is going on there right now, which I trust institutional buyers because they're probably got a lot more brain power than I have. So if they're doing it, I probably could just follow their lead. And there's some data on that you can look up and see where, Florida's hot too. But back on point is when I buy in a new area now, I'm starting that process. It's a little bit new, right? Or it's a little bit, obviously it's new. It's a little bit risky, I guess, so to speak, because you don't exactly know. But what I started with is Nick, my realtor in Greensboro. He happens to have 4 properties, 4 rentals. So I talked to him, right? I started with him. I'm building that trust. I'm building my advisory board, so to speak, my nest right now. I'm building that nest in Greensboro now, right? I have a nice Eagles nest in Maine. I have an Eagles nest here in Wake County in Raleigh. And now I'm building one a little bit over an hour and a half away. But anyway, yeah, so I'm starting there. I'm starting with Nick, my realtor, who I've gotten to know over the past 6 months because I've been trying to buy in Greensboro. I've not had luck yet. And he's talked to me about 2 handymen, 1 plumber that he leverages. So I'm doing that before I even buy, though. So I'm warming him up to that thought. So I look at this and think about how many. I'm looking at my resource tab here on one of my spreadsheets of one of many. And let me just take it. So here's a general idea. I have 140 resources listed on this particular one on my particular spreadsheet. I put the good and the bad on there as well. So it goes from if you need trim work done, tree cutting, chimney cleaners, power washing, plumbers. I have a bunch of plumbers, right, listed. And I organize it based on service company name, telephone number, email, and notes. And I have anyone that is no good, I have as a red line, avoid, but I don't delete them because I don't want to accidentally use them again. But yeah, so that's kind of what I do, and I take notes, and so that way I can remember what they did, and if I thought it was a great job, I highlight that. So then I have them in ranking order. So all my plumbers are in ranking order. And like I said, I have as plumbing as an example because you end up using a lot of plumbers. I think I have 9, and they're in order. Caggio and Sons Plumbing Incorporated. Big shout out to Matt Caggio and his family. They kill it. They're in Scarborough, Maine. Love those guys. They actually just did an emergency call for me 3 weekends ago. My tenant had an issue in her sink, in her kitchen sink. This was pretty funny and not funny, but it was kind of scary at first when I got the call. I own the unit. I own one unit, and then I own the unit below it, and so both units got impacted on that one. That was the first ever. So her kitchen sink was leaking, and she didn't know it, I guess. So she was doing dishes, and it leaked behind and into the subflooring and into the kitchen light in my unit, in unit 23 below. So I was like, holy crap. But Caggio Brothers knocked it out, called them, emergency call, $350 an hour. I get it. It's bad, but it is what it is. I had to spend the money, and they took care of me really well. So, I love those guys. Those are good. I actually put those guys in touch with our HOA now. So building management has those guys as well. But I'm going off on a bit of a tangent. But yeah, that's the way to do it. I have 5 painters, touch up paint. I do the same thing, guys, too, for resources for mortgages. I always advocate, do not go with just one broker. I know I like brokers, but size them up, check them out, keep them on point, keep them in check. Don't just trust them every single deal. And I'll be honest, I checked my one buddy, Casey. He's a good guy. I've known him since college. And he was in the middle of some stuff over the holidays, I think, or something. So he didn't get back to me too quick. So I was like, well, let me try Acadia Lending. So I love Acadia Lending. I like Casey Hamlin too. No qualms against him, but he took a little bit, and I got one heck of a rate because guess what, guys? I sized those up against each other. So that worked out to my advantage. Instead of just going with the same guy every single time, keep them on check. So I sized up the quote that I got from one lender and said, hey, here it is. Here's the good faith estimate, they call it.
Yeah, and I think that's so important. Yeah, that's so important because you have to keep everybody honest. Even our development projects right now, we get bids from 3 builders because you got to understand where they are within the spectrum, and you got to have something and a process in place to keep people honest so that they're not just you might have a relationship with them, but you got to keep people honest. Like in this scenario, yep. What was the interest rate that you got on this 25% down deal? Let's finish up the case study because you got it for 197. 206 cash, 25% down. What was the interest rate you got on this?
Yeah, good question, Kent. So going back to keeping them honest, right? So what happened was Acadia Lending quoted me 7.875. Well, Casey came in and was like, yo, Mike, I got you, man. And I'm like, oh my gosh, he's finally getting back to me because he was on vacation. He was over the holiday. He quotes me 7.25 at the same 1.1 discount point. So just so for the audience, one discount point doesn't mean 1% off. I believe one discount point represents 0.25 off your interest rate. So it's not 1 for 1. So, and also they were making it, and I don't know if that's still the case now, but you almost had to pay some sort of discount because what was happening is the rates are so high. They don't want, as we're expected to kind of come down, they don't want people just refining out of what their higher rate is. And so what it ends up doing is it puts you in a position where it's likely not advantageous for you to go and refi 1 year later if you had to pay those discount points. So for investors, depending on how much you're putting down, they were almost making it like mandatory that you had to pay some portion of discount. So anyway, 7.25 from him, 7.99 from Acadia. So then I sized it up. I said, hey, at the same cost, everything was about equal. And I said, look, so-and-so, I like you, but like, you got to figure something out here. Here's a good faith estimate from this lender. And so ultimately though, Kent, rates got better. I got really fortunate. And I said it I was on this different podcast. I said, apparently Christmas came a little bit early, but it all is perspective though, Kent, too, because if I was talking about a friggin' 7% rate 2 years ago, they'd be like, dude, you must be like just out of bankruptcy. Like 7% is horrendous, right? Like 2.5 years ago. Because I have a blended of 8 properties. My blended rate is 3.75 on all of them. And I only do 30-year fixed. I'm a huge advocate of 30-year fixed. But anyhow, 30-year fixed, ultimately what I got was 6.99.
Whoa, that's a great rate, man. Absolutely love that. And
not a bad rate.
With 2020 as your rent, what are you projecting to make on this property every single month?
I make 534 USD.
Man, that's a great cash and cash return right there.
It's not bad. What I also put in there too is some anticipated rental costs that that I don't necessarily have, but based on my history, and I think I talked about this on a podcast of yours, Ken, 8 months ago or so. It's 5% of rents for me. And that was when Dane, with the multifamily stuff that he has, he's like, that's like, his are 5X that. And I get that. But I don't have to worry there's so much I don't have to worry about with my model because it's townhomes and condos only, right? And I talked about it, sidewalks, all the outdoor stuff, roofing, windows, fences, siding, gutters, spigots. Like, the list is endless, right? There's crawl spaces, there's septic tanks. My model, I don't have those big ticket costs. So my historical data, not based on assumptions, shows me that it's just under 5% of what I collect in rent. So that, and it's kind of funny. And they kind of go up in equal, costs go up. It's all relative to inflation, I suppose. You could look at it that way. Because as my rents go up, they're kind of going up with inflation, which is nice. That's why they say real estate's a hedge against, inflation. So do my costs, though. Because costs have gone up. There's no doubt a plumber costs more than it did 2 years ago. Yep. Oh, we're celebrating, Kent.
Well, this is cool because I love that you went through the numbers and you actually included maintenance in it because there's so many people out there right now that are teaching like, oh, there's no maintenance cost. I was like, what are you doing? What are you teaching people? Why would there be zero maintenance? That doesn't make any sense at all. So that's amazing. Well, how about the tenant? How did you find the resident for this property and how did you screen them? And just tell us a little bit about the story of the resident that you just placed in.
Yeah, sure, Ken. Yeah. So part of my process has a really refined application, right? And it really starts there to have a good tenant. You have to, understand what parameters to value, right? So for me, I reached out, going back to the government agencies, I reached out to 4 different government agencies. I received, I think, about 12 different applicants in the course of maybe 3 days. And I started this process, guys, before I owned the property even. Believe it or not, you could start doing that. If you're quite confident you're going to close on it, you're not wasting anybody's time. You're actually saving time. You're saving everybody's time, because rather than waiting until you close to then start your application and then start reaching out to these resources, these government agencies, you've just wasted probably 2 solid weeks of where you could have been doing that. That's one of the 3 things that I'm doing in parallel, not waiting, twiddling my thumbs until the deal closes. So I reached out to those agencies. I got about 12 different applicants. And then my scoring system, which is based on, kind of years of doing this, I know what to value. So, for instance, some people think credit really is critical, but perhaps it is in the private market. Like, I've done executive rentals, I've done private market rentals. It's really not, guys. You could essentially assume their credit is not going to be very good. That's okay, right? They've gone through a lot. And I should highlight too. I mean, these tenants are resilient. They've been through a lot of tough times, right? You're not a slumlord because you're helping them out. If anything, you're almost a savior. There's a lot of intrinsic positivities that happen to me, in all honesty, that really are great. It's a win-win-win, where the government wins, the tenant wins, and you win, which is very rare. And you're winning in a pretty good, lucrative way, which is extremely hard to find. But yeah, so that's kind of where I'm going with what I'm looking at. So the application itself, and then I'll make some calls. So then I'll call in. So in this case, it was through these doors that came up big, and I spoke to this woman with her case manager on the phone, because I don't think she had a cell phone, and was able to go through what she completed in her case manager's office, my application, and she scored very well. And I was able to chat with her on the phone and then send some pictures. I mean, she hadn't even seen the unit, right? I mean, technically, I don't own the unit yet, even. And then I was able to start the paperwork. But I don't need to meet them in person. I do advocate, though, for that. If you are able to, and, for beginners, it's definitely a good thing to do. I used to take them to lunch or grab them coffee and say, hey, can you meet me at Starbucks, whatever, on the spot at this time? And I would then even follow up the meeting with saying, hey, do you mind showing me your place where you're at now? Because I would try to pick it out based on their address that they said where they're living at now. And I pick a Starbucks nearby, and I want to kind of see how they're living. And if they can't, that's kind of a red flag to me. And then I say, well, do you mind doing a FaceTime video and just showing me around your unit? I've done that. I've done that remotely from 852 miles away. And that helps too. In this case, she was in a shelter, so there's no point. She was in a shelter, literally, homeless shelter. And, I'm not going to do that. So, yeah, so she was super grateful. Her kid, her young boy was, in tears, honestly. So what ended up happening is my realtor, who knows my process very well, who now has adopted the Section 8 model that I've applied for years, met them. And that's part of leveraging your resources. My realtor is now a really great friend of mine for 16 years. He's actually coming down. We're doing a trip to Orlando. I was just talking to him before this meeting, and he's joining us on his trip to Orlando. We're doing a presidential suite stay at the Westgate and all this stuff. So he's coming down with one of his buddies too, who also follows the Section 8 secret model as well. And we're gonna have a good time. But yeah, so he met my tenant and met the son, and he's like, Mike, I didn't even know what to do. When I unlocked the door, the mom was crying and the boy was hugging me, and I was like, yeah, it's pretty wild, isn't it? Isn't it? It's like it's incredible, right? It makes you feel so good. He's like, yeah, I didn't even know what to do. I was like, do they think I'm Mike? I was like, I think they're just so damn happy they don't care. You unlock that door for them, and you're unlocking a new, trajectory of life for them, and they were so happy to get in there. Yeah,
and this is why I wanted to bring you on to the podcast for this story specifically, Mike. I think when the audience, and I think really truly believe that the audience listening to this wants to do good while doing good. And this is the ultimate sign of it, everybody. You get to learn from someone like Mike, learn how to find the resources, learn how to find deals, learn how to analyze the deals, learn how to negotiate. And it all comes and boils down to this one point where you get to walk the single mom into a home where she was living in a shelter, and they're both in tears, and they're so overwhelmed with joy, and they're so happy. And this feeling, this story is the reason why I started this podcast. Is to one, Mike, thank you for what you do again, because without people like you, I would have never had the home I grew up in. And similar in this story, this woman and her son would have never had the home that they have now, in a nice condo near the beach. And I think this is so extremely rewarding. And I think for folks that are listening to this right now, and I really hope this inspires all of you. We have laid out all the steps on this podcast for you to learn from. And you have the resources to ask the right questions. So hopefully that you all feel a little bit less afraid after listening to this podcast, feel a little bit more inspired and a little bit more confident to know that this community is here for all of you and to support you with all the resources that you might need to become successful. You still have to do the work.
Gotta do the work.
Hey, we are giving you the information for what you need, from tenant screening to analyzing. Mike, this has been such a great episode.
That's awesome. Yeah, Ken. And to think, I mean, and to recap what that deal was worth, I just plugged it into my forecaster just to see the numbers as you were highlighting and recapping things. But with the 7% interest rate, 25% down, $2,020 in rent, $2,020 in rent. I'm not including utilities. I don't pay for them. She gets a voucher, and there's a $200 HOA. And combine that with the 5% of anticipatory costs for repair work and whatnot, I'm making 14% cash on cash. Right? I mean, that's a win. That's a win, right? I mean, I'm making 14% cash on cash. Combine that with the unrealized gains, right, guys? And that's the other thing too, Kent, right? Like a lot of folks are new to it. That's fine. You could pick one category that you want to focus on. But I'll say if you just pick one, you're being short-sighted. It's okay to be short-sighted, I suppose, but I'd rather take a macro view of the whole deal. And what I mean by that is the whole annual return, when I combine the unrealized gains, the principal pay down and the appreciation, is 24.2% return first year. 24% return, right? Like that's pretty darn good. I mean, that's hard to find elsewhere. And that's actually that's assuming lower than average appreciation of 2%. And then lower than average of rent appreciation of 2%, because I would rather underpromise and overdeliver to my clients. And that's what I always try to tell them. Like if it looks good on the forecaster, it'll probably look even better in reality, because I know for a fact, I could tell you my rents have increased on average a little over 7% over the past 14 years of everywhere I bought. So 7% is a big difference than 2% when you compound that annually. It's a huge difference, actually. But still, 24%, and that's your worst year. And think about that, Kent, right? Like that's your worst year. And why is that? That's because it's compounding. So when you compound 2% again, the next year, it's a little bit bigger. And then you combine that with principal pay down, that's also gets better every year too. That's just how amortization schedules work. You're paying down more on principal with every passing year. So that means in year 2, my return goes to 25.13. But by year 7, I'm making 30% return and never looking back in year 7. And that's just all part of the model in my forecaster. So I plugged it in here just to take a quick gander. But when you kind of think about everything, right, Kent, like it's what a win.
I tell people all the time, it's a get rich slow game. Yeah. But you get to help people. And this is why I'm so happy with what we've been able to build. And Mike, you have been a great podcast guest. And I can't thank you enough for coming onto this podcast to share your information, share your knowledge, because we didn't really have anybody to come on and talk about investing in HOAs and condos. It's just frankly not a widely talked about topic. And I think we have provided a tremendous amount of value to the audience today. And well, Mike, where can people reach out to you if they want to find out more about you and what you do?
Yeah, guys, you see section8secrets.com. You're welcome to check the website out, see what there's some interesting video on there. There's actually a big, pretty long podcast on there that I did at Diesel Jack Media. There's some free content too. You can go to YouTube. Kent, you have some of our previous podcasts on your site as well. I think those podcasts are really good too, it's free information. So even if you don't buy the program, we're not looking at the cost is $8 a month and you can cancel whenever you want and you get the guide, the model, the standard operating procedures that you want to apply. I mean, and this is just one of many different ways, like we talked about at the beginning. There's so many different ways to make money in real estate or whatever your investing model, whatever your game is in my offense, defense, and game. There's so many different ways, but this is a really tried and true tested way for the past 17 years that I've applied and refined my model to a way where it's scalable, repeatable, and really digestible. Because that was the hardest thing, right? It goes back to why and how I created this. It was just so many people would ask me about it, and I'd just be like, holy cow, I don't have enough time to really go through the detail. I'd be like, oh, what about your application? Like, what do you ask there? It's like, you don't need to worry about the application yet. You need to worry about, like, how are you targeting things? What's the FMR? What are you looking for in your model here? What are you applying here? You don't just like throw a dart at it and think it's going to work out because you saw some podcast that, or not even a podcast, just an ad on like Facebook, right? I get these ads and it's just like, is it really that easy? Probably not. Yeah.
I love that. Well, if this has inspired you to get things started, I don't know what will, but just remember, guys, like, just be graceful with yourself. If you just take one step, chances are the next step will reveal itself to you. And that's what's ultimately going to lead you to success, because you are an action taker. And if you take action, chances are you start meeting people just like Mike that will help you on your journey. And ultimately, that will change the trajectory of your own family's life, just like Mike did for the family that he placed into his condo. So,
good point.
All right, Mike. Hey, I can't wait to have you back onto the podcast again, man. Thank you so much for coming on to the podcast again today. Can't wait to have you back, man.
I look forward to it, Kent. Thanks again.
All right. And we are out.